Okay, we'll deal with introductions, and then I'm going to very, very pleased to pass over to Gareth, who, as you may have all noticed from today's Transparency Times, has very kindly volunteered to help TTF run its film club, and that's a really positive development. We're extremely grateful to Gareth for doing that. So I'll take care of introductions, and I'll probably say a few words at the end. I'll also chip in here and there, but essentially today's meeting is going to be stewarded by and hosted by Gareth, and I'm really grateful to you, Gareth, for doing that. So let's do intros first of all. We've still got some folks coming through. Let's go to JB first of all. JB, please introduce yourself. Thank you.
Oh, thanks, Andy, and good evening, everyone. My name is JP Beckett. I'm an ex-investment gatekeeper of 20 years, retired now for my sins, and trying to carve a small world in podcasting, broadcasting, and a bit of writing.
Wow. Very good indeed. And JB's multitasking this evening. As is a chap, I put his chances of success somewhere below 5%. Let's see how that pans out, JB. Let's go to Gareth Steers, who's going to introduce himself now, and as I just mentioned, is going to be taking care of us this evening as well. Gareth, please say hello. Thank you.
Thanks, Andy. So I'm Gareth. My day job is as a technical pensions consultant. So we help pension professionals with sort of technical, legal, compliance issues they might have. So that's how I came across the Transparency Task Force. Primarily, it's worked with pension scams, actually. But at university, before I entered the pensions world, I studied film. So when I saw that there was a film club starting up, I was very keen, and I think Andy got wind of this and thought, oh, great, I can maybe rope Gareth in to help out. So here I am.
Thank you, Gareth. Really great to hear. Mr. Ed Tuhig over in Nova Scotia. Lovely to see you as always, Ed. Please say hello to everybody, because there's at least 2 or 3 faces on here that you've not seen before.
All right, good to be back with you people again, and listen in and get some wisdom from you. But my interests have mostly been in the macroeconomics end of it, and that is very closely associated with all the financial sector problems that you people are trying to solve. So I'll just follow along, and I watched and got the usual upset stomach over watching the movie on the corruption that can go on in the financial services markets. Anyway, good to be back with you. Thank you.
Thank you, Ed. Thank you. Mr. Richard von Fuchs. I probably mispronounced your surname. Forgive me if I have, and please don't hesitate.
Don't you remember Klaus Fuchs, the Atom Spy?
Okay, all right.
Same thing. Right. I used to be a radio announcer in Canada. I had a short time with the Canadian Broadcasting. I became an English teacher in Sopron, Hungary. And when they said I was too old, I started making advertisements for supermarkets and Socialist Party of Austria. I'm standing next to the leader, smiling. I just got an invitation to apply for a casting in Köln. I'm supposed to be a game show host. The problem is my German accent is not the best, so not too optimistic there. I still teach a little bit online just for something to do.
Very good, very good. And how did you hear about us? I'm always keen to know how people hear about.
My friend Franziska Fisken, who's a big money manager. I didn't realize that the main focus is money management. When I get money, I spend the goddamn stuff. I don't save anything.
I think that's what you're supposed to do, Richard. I think
absolutely. Keep it going.
Well, Francisco, thank you very much for introducing us to Richard. And Francisco, why don't you go next, please? And then we'll go to Andy, then to Tom, then to Kim.
Yeah, great. Okay, well, I live in Austria, and the reason I joined Transparency Task Force was because I, suffered a financial loss, and I've been thrilled to join these film clubs because it's been very interesting, and I, look forward to the discussion for this Nick Leeson film.
Thanks, Francisca. Mr. Andy Aikenhead.
Hi, everyone. So, yeah, Andy Aikenhead. I involved in a small consultancy firm. I actually spent the first 15 years actually in investment banking on the trading side. And actually, I was actually in Frankfurt when Leeson landed in Frankfurt, funnily enough, talking to Commerzbank about doing some work with them. But and I had a number of dealings with Barings in the years before, and in fact with Tony Hawes, who's the treasurer. So I know how naive they were. But yeah, I'm sort of the last 20 years, I've really been involved in change in financial services, and I'm trying to do a little bit of work with Andy and the TTF as well. So
thanks very much indeed. And Andy's one of our many, many volunteers. If anybody has the urge to volunteer to help TTF, please do so. We're always recruiting volunteers. I'll put a link to our volunteers page in the chat in a moment. Andy, great to have you with us. Tom Todd, I'm so pleased to see you with us today. Tom and I had the first conversation maybe 4 or 5 weeks ago, if I remember rightly. Tom, I'm really pleased to see you with us. Please introduce yourself to everybody. Thank you.
Thank you, Andy, and good evening, or whatever the appropriate greeting is for your particular time zone. Good to have such a global and engaged group. I'm essentially a financial services. I don't think I have enough white hair yet to call myself a veteran, but my tour of the financial services has been far and wide across the consumer banking world, the corporate banking world, the investment banking world, and that too global, some UK, some Asia, some Africa, and connected with a large North American bank. So banking and financial services in general, and with that fundraising and with an ethics slant. So the TTF, with all of the wonderful things it is seeking to do, has attracted my attention. And I apologize because of the various ones who are here this evening, I'm possibly going to be here the shortest amount of time because I'm actually simply exploring the TTF world. So I thought I'd dip in for a little while, having read some of Leeson's more recent comments. And with that, glad to get a chance to meet each of you.
Wonderful. Thank you very much, Tom. Let's now go to Kim Schweitzer, or as we call her, LinkedIn Kim, because LinkedIn Kim is doing a great job helping us to manage our LinkedIn account. Kim, over to you.
Hi there. How are you?
Okay.
I am Kim Schweitzer. My background is in total rewards, mostly M&A and executive compensation, and then across all industries, and then working in-house in total rewards for financial services. Recently, I've been a director of Time for Change London, looking at the purpose of companies, living values authentically, and then linking that back to total rewards and especially compensation and incentives. As Andy mentioned, I've been helping out as a volunteer with TTF to respond to Andy's many requests to connect, and also to his messages on LinkedIn. So that's been very interesting. And I'm also an ambassador for TTF.
Thank you very much indeed. And I'm absolutely sure that one of the themes through the film is the way incentives promoted the behavior that we saw. So it's particularly relevant that you're here tonight. Great to have you here, Kim. I think that's everybody, isn't it? So there's the link in the chat to the volunteers page. If you haven't yet volunteered to do something for TTF, but you might want to, then of course you'd be most welcome to, but you don't have to. It's entirely optional, of course. I'm now, with great pleasure, going to pass over to Gareth. So Gareth, over to you.
All right, good. Okay, well, I'm not going to massively reinvent the wheel from what's happened in the past for those who've been at previous film clubs, and I'm also not intending to do sort of all the talking. I'm going to begin by sort of doing a bit of an explainer just to remind everyone what the film's about, and then the following slides will really just be sort of kicking off points that will hopefully lead to more discussion. So, first of all, just a reminder of what the film or films were about. So, as you can see, it was in February '95 that Barings Bank famously went bankrupt. It was after 232 years by my count, and it was the second oldest merchant bank in the world. So, obviously a huge story, especially in the UK, as it was the UK's oldest. And it seemed to be largely the responsibility, or almost entirely the responsibility, depending on your view, of a single employee in their Singapore office, Nick Leeson. So yeah, he lost almost single-handedly 827 million at the time, which I made to be about 1.6 billion, about double in today's money. And amazingly, Leeson wasn't even supposed to be making any kind of big bets. I think the internet's sort of mixed on this, but I gather he could do a little bit of proprietary investing sort of on behalf of the bank, but mostly it wasn't supposed to be that. However, after he started making losses, everything spiraled for him. He tried to make the losses back by betting with the bank's money. As you saw in the film, I think was successful at one point, and then found himself again in the same situation, and eventually got to the stage where he was 827 million down. And he was jailed in Singapore for fraud, sentenced for 6.5 years, but released in 1999 after just 4 1/3 years. I gather he was seriously ill with cancer at the time, also released for good behaviour, but I think he recovered since then, despite a bad prognosis. That's a bit, just a little bit more, just an explaining a few concepts. Probably you understand these points better than I do, but just in case. So his job, as I said, wasn't really as sort of an investor. Mainly his role was to execute transactions on behalf of their clients and earn commission for Barings. He was primarily working with futures, which, as you may or may not know, are agreements to buy or sell an asset at a future date at a price agreed today. So that's inherently risky. You could wind up having to pay more for an asset than it's now worth, or lose money on a sale. Now, a key point was his dual role. He was both the general manager and the head of settlement operations in the Singapore office. Effectively meant he was checking his own work. He was doing his own sort of bookkeeping, if you like, which meant it was much easier for him than it would be normally to hide what he was doing. The fiction film mentions a lot this 5/8 account. This is apparently just meant to be a notional, what's called error account, which can be used to correct mistakes in trading. But Leeson used it to hide his losses, put them in there, and made out that it was a client account when questioned about it. Also, you need to be aware of what these margin payments were and how it worked. So with a future, you would have a call for a margin payment, and the bank would often pay this on their client's behalf and then invoice the clients to get that money back. Now, what should have happened is they should have spotted that these margin payments were worth way more over time than what they were getting back from clients, but they never checked. And so this is again where Leeson was able to hide the losses he was making for the bank. So that's all I wanted to do on sort of explaining the situation. Does anyone want to come in and sort of expand on that if they think that sort of undersells it, or ask any questions?
Yeah, I'll just say that it's of course against accounting practice to have one person doing too many roles, isn't it?
Yeah, I think it was, reading about it, I wasn't sure, I didn't think it was strictly speaking illegal, but it was unusual and not something, you know, sort of more frowned upon and questionable. But I'm not an expert in that area, so I may be wrong. That's just what I read in passing.
No, apparently, I mean, I actually, amongst all my various sins, started accountancy and then gave up after a while. But auditing is about having different people with different responsibilities. If you've got one person doing too much, then obviously there isn't a built-in check-in. And that was seen to me the glaringly problem with that he was looking after the accounts as well as doing the sales. I mean, that's just completely against the very basic principles of auditing and accountancy. Totally glaringly.
In a trading context, you would never have the head of settlements and the head of trading being the same person. And that goes back even way before this arrangement at Barings. I think another mistake, it's interesting because I think Nick Leeson on his website talks about how he went out there and started making millions. but actually he wasn't a trader. And that's, you know, it's interesting. It's a completely different skill set. And they put, you know, I think often people from operations aspired to be traders. And he went out to Singapore without any trading experience at all, and was allowed to set up. So it wasn't a trading operation that existed. He was allowed to set it up. He also hired people with very little experience as well. Yeah. So it was a disaster waiting to happen.
Yeah. Although he does say in the BBC documentary, he says that he was critical of the fact that Baring Bank wasn't prepared to get him trained personnel, that they wanted cheap and cheerful people from Singapore, which he trained. So as you say, they were really, it was in so many ways a disaster waiting to happen.
Yeah, on that particular point, which I think is very interesting, it seemed to me that Barings was basically just taking a punt in the Asian market. Yeah, they didn't really seem to want to put any real money behind it. I got the impression that their perception was, if it works out, great. If it doesn't, then big deal. But let's not put any real money into it to make everything as profitable as it can be in the meantime. Yeah. And you know, obviously, risk management is not something you kind of experiment with or gamble with. And of course, they ended up paying the ultimate price. Amazing.
It's interesting. They had a poor record. So I said I've met Tony Hawes. So I met Tony Hawes a couple of times. About 5 years before this.
Wow.
About 89, I think. So I used to trade, run the floating rate note trading operation for an arm of Lloyd's Bank in the mid to late 80s. And I was approached by them to head up their sterling floating rate note operation. And like a lot of people who got into it, they saw people making money in some dollar floating rate notes. And they started to make markets in sterling floating rate notes on the same basis. And it was a market that was a bit like the Nikkei. It sort of jumped about like nothing on earth, whereas the dollar market was much more liquid, much more stable. And so they quote very narrow margins. And they, like, there's another firm that I actually worked for at the end of the 80s. They got what you call hosed on it. So basically they lost money. And I went to meet him a couple of times, and also met the person who was running the sterling floating rate note trading, who's, you know, they were both very delightful, but very naive.
Sounds it. If I may, let me invite Girk and Giles to introduce themselves. Girk, thank you very much for joining us. You missed the introductory round at the very beginning, but please do take a moment to tell everybody a little bit about yourself. Thank you.
I am. Sorry.
Thanks, Andy. Sorry, Giles here. I'm not on camera at the moment. I'm just on my way to work, so my apologies. I'll get on camera shortly, but excuse me, it's 5:20 in Sydney in the morning. So my name is Giles Gunaseka. I run a global impact initiative, which is an impact investing business. So we specialise in creating investments that have both a financial return as well as a social impact. So my interest with this movie, I actually used to do some teaching, and I used to use this movie as a really good example of a number of things, which was, you know, having the points that you already raised around not having proper separation of duties, and how rare it is to have, and now illegal to have the front office and the back office run by the same person, and also just that basic Warren Buffett concept about knowing what you're buying and knowing what you're doing and knowing what you're investing in, and clearly Barings at a high level, at a senior management level, at a board level, and at an operational level back in London, didn't really understand what was going on, but because it was making money, you know, really didn't investigate it further until obviously they needed to. So yeah, thanks Andy for allowing me to do the introduction. But yeah, happy to be listen intently on the conversation. So thank you.
Great. It's really good that you're here, Giles, especially as it's 5:20 in Sydney. And thanks again, Giles, for your talk at the Australia event we had last week. It really was exceptionally good input. Thank you, Giles. Let's go back to Girk. Girk, obviously, you started introducing yourself, and Giles was unaware that you were speaking. So please, Girk, let's go back to you. Thank you.
Yeah, I'm in the Clydesdale stroke Virgin Money remediation support group, supporting a bunch of SMEs that have been basically screwed over by NAB and their interest rate swaps embedded into what they call tailored business loans. And I also do some work with the mortgage prisoners.
Yeah, thank you very much indeed. Thank you, Gert. Is this your first TTF event? I think it might be. Or
I've been to some of your other events, but I haven't done one of these.
The film club. Okay, lovely.
I thought it'd be interesting to see what you guys all had to say about it. I watched it on YouTube one day last week. Yeah. I also watched the other documentary that was following it and things like that. So with Nick Leeson on there. So.
Yeah, thank you, Gareth. Back to you. Thank you very much.
Okay, yeah, thanks, Andy. So talking about the sort of two films. Next slide, just to mention that there were two films this week. The original advertising for this, I think, just linked to the fiction film, the Ewan McGregor film, Rogue Trader, but it does seem like a few of you have watched both, which is good, as I did. Just a quick note about both and the differences. The Nick Leeson and the Fall of the House of Barings was from 1996, so just over a year after Barings went bankrupt. Documentary from Adam Curtis, interesting documentary maker, still working today, has a sort of unique style. And this was first aired on the BBC in '96 as part of the investigative journalism series Inside Story. So that's a documentary, sort of doing the things you sort of expect from investigative journalism documentaries of that type. Then 3 years later, you had the Ewan McGregor vehicle, Rogue Trader, written and directed by James Dearden. But one important thing to note is that it's based on Leeson's own book from 1996. As you can see, Rogue Trader, How I Brought Down Barry's Bank. I don't know whether it was the film was made with sort of Leeson's input or not, or whether it was supported by him. But it might be interesting to sort of talk about the two films as pieces of filmmaking. I thought that Rogue Trader was slightly sympathetic, I suppose, to Nick Leeson, but I wouldn't call it too sympathetic. It did sort of highlight, it didn't sort of rough over the sharp edges of his character. Whereas the documentary, I thought, sort of especially hearing from some of his colleagues, was a bit more brutal about him. So I thought that might be another sort of kicking off point if anyone wanted to sort of talk about the films.
Well, Gareth, I wonder whether I might Tom here, and I'll apologize and say good evening because I will visit here. But before I go, I'll allow you to continue with the conversations on the two options in terms of what people have seen. But just as a general comment before I disappear, respectfully to each of you, I've enjoyed already hearing some of the comments that people have brought to the table. And there is a value in taking lessons from these for things that we can do together with TTF. On the matter of the different roles, a little bit of risk of throwing the baby away with the bathwater, in the sense that different roles in and of themselves aren't necessarily the problem. What does become clear is the lack of knowledge of actually what's going on. So the risk in the process can only be identified once people understand what those processes are. And what had happened was, whilst you can have one person wearing two different hats, and that's entirely fine, you will have come across, most of you on this call, the term maker checker, which across the industry, when you have two roles that once joined together carry a risk, that is the issue. So that then speaks to the wider organization decision makers understanding the process and where the risks of the process are. With that, both to Andy and to the rest of you, thank you and good evening. I'll let you carry on, Gareth.
Thanks, Tom. See you later, Tom. Thank you.
Thank you. Goodbye.
Bye then.
Bye.
Yeah, I thought I thought the documentary was, as you'd expect, a bit more balanced. There was one bit in the documentary that I thought was a really powerful point in terms of the bigger picture. I think I'm right in saying the documentary started off with a comment that Margaret Thatcher deregulated the financial services industry, you know, Big Bang and all that. And one way of looking at the whole of the Barings collapse story is to see as an almost inevitable consequence that if you deregulate a market that is very, very testosterone charged towards making profits, it's almost kind of inevitable you're going to get rogue traders of one kind or another. You know, why wouldn't somebody be a rogue trader if they thought they could get away with it and if they thought they could maximize their bonuses? And of course, one of the other things that the Big Bang did is it kind of brought in a lot of new types of people into the financial services sector that hadn't been brought up with this idea of my word is my bond. But back to you, Gareth.
Sure. Oh, Francisca?
Yeah, I just wanted to ask if there could be a show of hands of who saw what and whether you thought one of the films was better than the other. I mean, I realise that's very subjective.
Okay. All right. Hands up if you saw the actual film itself, the fictional film, as Gareth has called it. So, yeah, most have. Thank you. And what about the documentary? Saw that as well. Yeah.
I saw the documentary a long time ago, so I really can't remember. But I mean, one of the interesting things about it, though, is actually also, I think, unique to, you know, people who are termed rogue traders, is Leeson never set out to make money for himself or to defraud Barings Bank in any shape or form. You know, he has actually benefited in the long run from actually his profile, but not, you know, in the short term. He obviously suffered significantly for his misdemeanors.
Yeah.
Okay. In terms of sort of my sort of favourite, I sort of find it hard. I think I quite like that we looked at a documentary and a fiction film on this, actually, because I think it was sort of, and I watched the fiction film first and then the documentary. I think that gave me sort of a good perspective on it. I had a sort of a bit of awareness of the incident, but I didn't know it in and out. I don't work in that industry. So it was quite entertaining to see the story unfold as a fiction film, and then the documentary sort of really sort of went into the detail a bit more, and sort of, you know, I learned a lot more about what happened from that. So I don't know if I could pick a favourite, really. Did you have a favourite, Francisca?
Well, yeah, I mean, I did enjoy the film from a fiction point of view, but I felt it glossed over the mechanics. And I thought the documentary gave much more, explained things better, and I felt it gave much more insight into what went wrong. I felt I understood more what had gone on, whereas the film I felt, okay, yes, somebody's cheated somebody, but I couldn't quite understand why from the film, the fiction. That was my perspective.
Well, I'm glad you said what went wrong, because so the next 3 slides are really sort of about that. And I'll show you quickly all 3, and then we'll go one at a time. Because what I thought sort of the bulk of our sort of chat could be is, which we've already sort of started on, is where we think it all went wrong. And I think this disaster has sort of many parents, if you like. I think there's a phrase, something like that. So we can talk about Nick himself, what drove him to do the things he did. These are the things I sort of picked up from the film as things I thought might help explain it. We could talk about the bank itself, because victim though it is, it wasn't completely faultless in all of this.
Yeah.
And as I think we've touched on as well, sort of the industry is operating in. Sort of how these factors sort of contributed to Barings' downfall. So if I just explain what I mean very quickly by each of these, and then people feel free to jump in and sort of expand or add to what I think. So first of all is this hubris idea. I think the fiction film in particular sort of hinted at sort of people telling Nick that he's the king of the exchange, he's this genius. And I think that can go to your head, frankly. The ambition point. So one thing the fiction film really picked up on, more even than the documentary, was this sort of class element that was at play. Here is this working class kid from Watford, and he's sort of operating at this very prestigious, very old bank full of sort of the public school alumni. And the documentary, I think, sort of made clearer as well that he was keen to impress, or on the flip side of that, sort of worried about not fitting in and not doing well amongst these people. In the greed point, I take Andy's point that it didn't seem like he was out for himself, but he did get a £135,000 bonus at one point. And the fiction film is based on his own account, so perhaps he sort of underplayed his own sort of greediness.
Yeah.
Testosterone point, I think Andy made. In the fiction film, they show a fight on the trading floor, I think, to sort of hint at this factor. And just the general point about being a gambler. When you're gambling, you can very easily fall into logical mistakes. The famous gambler's fallacy about underestimating or overestimating the likelihood of an event because it's happened before, and just the general idea of throwing good money after bad. So these are things I picked up from the films as sort of potential sort of insights into Nick's character.
He seemed to be really driven by the idea of not letting down or not disappointing his mum and dad and his family. He seemed to like almost do anything to look good in their eyes. And I got the impression he was just a very kind of naive person. He was like massively out of his depth. I wouldn't think of him as like, you know, an evil type person or a systematic kind of money grabbing type. It was just the wrong person doing that kind of job, wrong kind of mindset, not mature enough, not balanced enough. He should not have been doing that job. He really shouldn't have been. And he ended up, taking all of his opportunities and try to do well out of it. How on earth somebody can like live with themselves when they're doing that kind of thing? God knows. God knows, because he knew he was breaking the law. He must have done.
I think Gareth's point about he sort of, you know, the king of the exchange, he started to believe his own publicity. I think that's, you know, and I've seen that a lot in financial markets, that you get that. And so certainly that level of, you know, ego that sort of develops in that sort of environment is quite damaging. It's interesting because I would say that the best traders I've seen are actually not egotistical at all. It's interesting, you know, what happens is he did what a classic trader's mistake. It's not just the gambler, part of the gambler's fallacy is you start to take effectively, you attach yourself to your positions. The best traders actually are objective and actually continually assessing what's going on around, not just in terms of the market, but their positions. And he clearly got stuck with it. And I think as has come up, what happened, he made mistakes and he tried to effectively cover up his mistakes. And I'm sure, you know, quite early on, he realized he was doing, you know, what he was doing was wrong, but it was a way of, you know, how do you get out of it other than own up and get fired?
Yeah. He's a bit like a hamster in a hamster's wheel.
I think the other thing was that he was getting praised for his results, even though, you know, they were all false. But he you know, so he kept getting a pat on his back, and he was thinking, "Oh, this is great. You know, I've got to carry on doing this." And he felt that he could keep covering for it himself, so it was okay to carry on.
Having seen the movie and not the documentary, I had to feel sorry for the fellow, having been in pressure situations myself, not in that sort of thing, but in guaranteeing a corporation that the partners didn't live up to their responsibilities in. I just couldn't imagine anybody but a psychopath being able to stand the pressures that he would have been subject to day in and day out. I can see it for a month or two, but when you get into many months, I really felt sorry for the guy.
And in the documentary, someone describes him as a complex guy. And I think that's exactly right. Also, what was interesting in the documentary was he made it quite clear that he really didn't like anyone at the company. And I'm sure that probably made it easier to defraud them. These weren't people, I guess, that he felt he could confide in. He didn't like them, didn't trust them, didn't respect them. All this was sort of all wrapped up together, but at the same time, he's feeling more and more confident in himself because they seem to think the world of him. It's such an interesting sort of interpersonal situation that was going on there.
I thought his wife was lovely. I mean, she was so supportive and understanding and all the rest of it. She was great. You could, she seemed so authentic. When she was being interviewed in the documentary, my view didn't change in the documentary compared to how she was portrayed in the film. You know, what a nice human being. I mean, it must have been such a terrible shock to the system. But even she with her nice demeanour started to get kind of hooked on this. You know, only another month to the bonus, only another week to the bonus, only another day to the bonus. And you can see, can't you? I mean, this speaks to Kim's role in executive reward and stuff. You can see how people will end up so focused on doing whatever it will take to hit the bonus that everything else goes out of you know, it goes into the peripheral vision, and what they're focused on is just hitting the numbers and doing what it's going to take. And isn't it a bit bizarre that you can have a bonus system? I know it's less frequent these days. A bonus system where people make an absolute packet and they can walk the day after, you know, leaving behind complete carnage. I think they've changed that a bit, haven't they? Now they've made it so that if you do something seriously bad, you are legally exposed to having to pay some of the money back. Yeah, they
do, but do any of the banks or the regulators really go after them very much? Probably not so much. But I thought it was interesting. Oh wait, I didn't put the link there. There's also a very interesting London Real video from more recent times on YouTube, January 2020. Sorry, I thought I copied the link there. And so that was just last year. And he was saying it wasn't about the money. It wasn't about his compensation and incentives, that it was about winning. And the thing is, because early on he was able to win and turn it around. I mean, in reality, if there hadn't been a natural disaster, right, at the same time, then perhaps he would have been able to turn it around again. I mean, you never know. It's all ifs and buts, right? But I thought it was interesting that he wasn't making it about the money and about, you know, the compensation part of it, but it was about winning, and it was about being the best. And, you know,
I think when you talk to most traders, the money is just a scorecard.
Yeah.
You know, it's like, that's what it is. Just as an aside, I would say I heard a story. I actually know this was true because I know that the people involved, but UBS had a bonus scheme, I think it was in '93, and they had effectively tiered bonuses. And two traders were a few $1,000s short of hitting the mark to get a £1 million bonus.
Wow.
And so they concocted, right at the end of the day, they concocted some trades with a third party, an interdealer broker, to get over this mark. And of course they got found out and they both got nothing and got fired.
By the way, I had something like that myself.
And that's really a good story, because most of them won't have gotten found out, and they would have gotten the bonus.
Now, I had a funny example like that, actually. You've just reminded me. I worked a long time ago, because I've just done millions of different jobs. I was working selling advertisements for a trade magazine called Meat Magazine, and there was a an incentive that if I got sold £500 of advertising, I would get a £50 bonus, and I was only like £25 off. And I actually didn't think this out myself. This is how naive I was, because I was very naive, but my immediate boss pretended to buy an advertisement in order that I would achieve this target. And then later on, it all got found out, and both of us got in trouble for it.
That's such an important point, because when you have an entire organizational structure where everybody's on top of everybody else and everybody has an interest in the people at the bottom hitting their targets, you're designing a system whereby people are incentivized to turn away, to look the other way, to have a Nelsonian eye, to ignore what they're actually seeing. And I'll tell you what was amazing. The guy, I think this is the chap that Andy was talking about. You know, the very posh chap in the documentary who was one of the managers, the kind of tall, slim, very posh guy. He just seemed unbelievably naive to me. It seemed like he didn't have a clue what was going on. I thought he was like, wow, is this guy seriously responsible for all of that? You know?
I got to say that Tony Hawes, in my recollection, I felt very nice and quite naive. Tim McInerney didn't look very much like him. Tony Hawes was shorter and had glasses.
Okay. But, that's interesting. Back to Gareth, I think.
Yeah, well, shall we move on to, that might bring us nicely, actually, on to Barings themselves and their role in their own downfall. Again, I'll just very briefly explain what I mean about each of these. If you watch the documentary, at one point, I think one of them said that there was a feeling that, you know, this sort of thing couldn't happen to Barings. They're very, very confident about their own company, despite the fact that about 100 years previous to Leeson, they lost a similar sized fortune in relative terms in Argentina in an investment gone wrong. So obviously just not learning lessons, it was bound to take them down eventually. Also, I mean, we've talked about this, but there's a few areas where internal controls went wrong. The failed audit, that seemed to be key. They really could have, I mean, even just with, you know, the lack of oversight within the Singapore office, they could have easily caught it a year, 2 years earlier on just by, you know, standard audit, which was in the documentary, Nick described it just as, you know, just a ridiculous tick box exercise. I just came over and agreed to everything he said. We talked about Nick's role, and also I just wanted to mention generally, certainly within Barings Bank, there did seem to be a dislike of red tape. They didn't seem to sort of value checks and controls and any sort of regulation of what they were doing. They thought that people should just be free to their own devices to make money for the company.
Yeah. They just didn't seem to keep up with the times, did they? They had like an almost 19th century approach to banking. You know, my word is my bond, the Queen's our client, what could possibly go wrong? And that just doesn't work. It just doesn't work. Interestingly, and I've got no idea if this is true or not, but I've heard some people say that when the city moved from the area of London around the Bank of England to Canary Wharf, a lot of people say that the actual physicality of moving from the City of London to Canary Wharf for a lot of these major banks has actually had a real impact on the culture within some of these organizations. It's as if they've been taken out of a context that was once a very kind of stable, safe, traditional, prudent mindset to Canary Wharf is all about just let's maximize profits today, you know, let alone tomorrow. That's interesting, I think.
Yeah.
It's all about glitz and image, isn't it? I think, you know, at Canary Wharf, it's who's got the biggest skyscraper, how many floors have we got, how much glass can we put on it? So it's all that image.
I think JP had his hand up.
Concept of maximizing profit is absolutely horrible, that they do anything to maximize profit.
Yeah,
Andy, I worked for one of the big four, and I was in complex product governance and in an office in Glasgow, and I had a very earnest and risk-averse investment controller as my boss. And I remember going down to 1CP in Canary Wharf, which is one of the big skyscrapers. I won't name the bank. I won't say. And it totally struck me as soon as I stepped onto the floor was just this sheer energy and buzz and just everyone running around and everyone, just, sees the opportunity, whereas complete contrast to our office, which was very prosaic and methodical and measured. And it does show you that, I mean, everyone knows that, particularly around Canary Wharf, you just need to look at, for example, the average age of people who are working in Canary Wharf, compare that to the rest of the industry. There's a big gap, and just that sheer energy, and it's a crucible, the Canary Wharf. It's a crucible of young minds and everyone trying to compete with each other, and that unfortunately sometimes does drive bad outcomes.
Yeah. Very good. It's very interesting.
Can I ask what might be a really naive question? Futures and options, is it basically a nil-sum game? In other words, does it actually do anything good for society? There's a really challenging sort of point of view. I genuinely don't know the answer, but it seems to me that what are they actually doing that's constructive, that's in the real world? Or is it just like roulette? Is it just like one person loses, one person wins? And Andy, you probably have a view on that.
Yeah, so it could be very useful. So, for example, if you have a risk in terms of you have money coming in or going out in a period in the future, you can reduce that risk by using a future. So there are other methods as well in money markets. So you could effectively de-risk yourself. But what, of course, has happened, and the sort of Cymix example is a glorious example of that, because in fact, because I come from an interest rate trading background, I guess I tend not to think about as much the stock option type and stock futures, because they were trading effectively index futures and options. And the idea was that they were trying to arbitrage between potentially 3 exchanges, Tokyo, Osaka, and Singapore, on stock, and I think when you look at arbitrage, there are rational reasons for it, but it actually becomes, in that kind of context, purely effectively a speculative exercise. Unless,
I can understand. I can understand within the industry of buying and selling shares and investing and so on, that these shorts and derivatives and other no backing investments, they might be fine within the industry, but what do they do to society in general? What advantage are they to the other 98% of the population? To me, they are taking wealth and the proper use of money and putting it into a phase that only helps that 5 or 10% or 3% that are in the business. And I think that there should be interests of the general public, and that's where regulation should come in and try and say, let's get the gambling out of this and get back to the proper use of resources. Anyway, I've questioned that, and nobody has ever straightened me out that it was of any use to anybody except the traders.
So for most of these products, there is a rational usage. So, for example, if you're thinking about furniture manufacturing, just as one, say you're buying wood from Scandinavia, you won't, it takes time to manufacture the furniture and sell it. You might need to pay for it. So, I mean, it used to be that's how bills of exchange came about, which essentially were a post-dated check. And a lot of these products have sort of built on those sorts of things. But what's happened is they've grown out of all proportion, Ed, to, as you put it, to any rational usage. And that was a major factor behind the credit crunch. So you'd have credit default swaps So the total volume of a credit default swap on a bond, say, so you might have a bond where the total nominal amount was, say, $500 million. But there actually, with some of these products, there were default swaps or effectively derivatives on that product that were many times the nominal amount of the original bond or the original asset. And that just is completely insane. So that, you know, effectively you had this derivatives industry that was many times more, you know, in terms of value, greater than the global GDP, essentially.
Wow.
Francisca, I think you got your hand up.
I just want to say that, you know, something that I've become aware of since I've joined Transparency Task Force, obviously it's enabled me to have a much greater insight into all these areas. But money is basically a belief system, isn't it? I mean, that piece of paper that says £5 or $10 is just a belief system. When it first came out, you could go to a bank and get £5 in gold currency. Then they removed it from the gold standard. Now they can print as much as they like. The money that's reported is just fictitious. The pieces of paper and coins we've got are only a very small proportion of what supposedly is in the financial system. And it's all about belief, isn't it? You know, the stocks can go up and down just because of belief. I mean, you know, what's he called? Warren Buffett only has to move a finger in one direction and the whole financial markets will be changing. It's a sort of religion.
I saw something on I think it might have been on RT, where they had a different outlook to the news that we normally get on BBC, etc. But they were talking about how in America the government goes on about how fantastic the stock market's doing, so their economy must be fantastic, and then they showed some graphs and they showed what the real economy has actually done and the benefit to the everyday people, and then where the stock market figures are. And so there's just no correlation between the two at all, you know, except for the fact that one's at 20% and the other one's at 90%.
Yeah, I think that's a big point. We can see that now, can't we, with the way the stock markets around the world are still just, you know, charging ahead.
Yeah.
And everyone's worried, you know, how long before this great big bubble bursts? That's the big worry, isn't it?
Yeah.
Yeah.
Well,
I'm very worried personally. I've got
a big bubble, aren't they?
scared.
Yeah.
Yeah, I'm scared. I think I can't understand why stocks and shares have gone up to the extent they have. And again, it's all belief system. It's all about hoping everything is going to be wonderful when everybody's had their vaccination and so on and so forth. It's just all wishing for the best. And that's what the Barings Bank problem was. It was that they wanted to believe that Nick Leeson was a genius.
Yeah, I agree. I'm just
Sorry.
I'm just saying, I'm just putting into the chat the details of our next TTF Film Club. So it's on Monday, May the 8th. Sorry, 8th. Monday, May the 10th, 6 p.m. to 8 p.m. And the film is Margin Call. I have seen it. It's a great movie. So please keep yourselves clear for that one if you want to watch it. And I think you can just click on that link and watch it for free on YouTube. Giles has put his hand up. Giles, lovely to see you. We can see you now.
You too, Eddie. No, I was just going to pick up on that point around the trading and the zero sum game. Yeah, I mean, absolutely, futures and options is a zero sum game. But I guess from a entity perspective, you know, these investment banks are obviously, you know, they're trading both sides. So obviously, from a risk and compliance perspective, you could have one trader that's taking a negative position on the Nikkei and another one taking a positive. But I guess from a banking perspective, that's, you know, the zero sum game, and obviously from an industry perspective, you know, when you roll that up, it is too. So I think, you know, the movie, you know, does show it very much as, you know, it's a roll of the dice and, you know, see which way it goes, and you either make money or you don't. I think that's quite simplistic. And, you know, certainly I'm not going to apologise for traders' behaviour, but, you know, there are legitimate reasons for these instruments. It is not all gambling, but obviously, you know, as this movie highlighted, you know, there is, you know, in this instance, he was definitely well, from what the movie showed anyway, he was gambling on what his thoughts on the Nikkei was, and whether it was based on any fundamentals or any other reasons, who knows? But I think it's too early to say take these instruments out, because they are actually used quite validly. But I think when you overlay it with the testosterone and the poor bonus culture and all those sort of things, it certainly is a massive issue.
Wow. That's really interesting, Giles. Over the last week or so, I've had a little bit of dialogue with a guy called Tom Hayes. You might recognize the name. He's the guy that ended up going to jail. He's another kind of Nick Leeson type character. And what he's absolutely adamant about is basically that what he did wrong in the bank that he was working for, I forget which one it was basically, common standard practice. I think it was LIBOR rigging type stuff. And you do end up wondering just how common some of these practices are. Is it really the individual that's at wrong, that's at fault, or is it really the organization as a whole? I can't escape thinking Warren Buffett's comment, show me the incentive and I'll show you the outcome, explains 90% of all conduct in the financial services sector, in fact in life generally. People do what they are in some way motivated to do or incentivized to do. I think it's a great film and a really good documentary as well. Gareth, back to you, please.
Yeah, well, we're sort of coming into sort of our last 5 minutes. So I'll move on to this frog in the pot point, because I don't think we've sort of talked about this yet. And it's sort of a concept that I've found interesting for years. The frog in the pot sort of idea is that if you put a frog into boiling water, it will hop straight out. But if you so wished to burn it to death or cook it, you would put it in cold water and then gradually increase the temperature. And what occurred to me in this situation is that there wasn't really sort of any big event to alert the sort of powers that be at Barings that something's wrong here. It was sort of a gradual increase in sort of risk that they were exposed to, without them ever really having some sort of, as I put it there, jolt to sort of shake them out of their stupor. And I just thought, I've always, like I said, found this idea interesting. I wondered if anyone had any sort of thoughts on that.
I'm inclined to agree with you entirely. The auditors should have been that jolt to the system. They should have gone in there, seen it, sorted it all out. People should have been sacked, etc., etc., etc. But they just completely stuffed up. In the same way, in the global financial crisis, all the rating agencies were shown to be completely and utterly useless. They weren't really rating reality. They were rating whatever people would be happy to buy their rating for. These layers of inverted commas governance are often actually kind of false or fake or faux. The kind of pseudo governance. You mustn't assume they actually work, because every now and then they just don't. I think Kim had her hand up. Kim?
Yeah, I was going to say, I kind of looked at that frog in a pot more about him, because there was nothing initially jolting him into reality, because they weren't questioning him. But in terms of the actual company themselves, as Andy mentioned, I can't see where he could be asking for millions of pounds or dollars to be sent to him when it was more than what the clients were even worth. So at some point in time, it's just laziness almost. That's what it sounded like. Is people just not doing their job or living in a different reality? And maybe people do live in different realities. But I also wanted to mention something about what Andy said about show me the incentive and I'll show you the outcome. I remember when I first started working in executive compensation, and we used to do global compensation as well. And I remember saying something early on to one of the partners in our company that I said, oh, wow, that's really great that that this one executive was so supportive of the recommendations that we were making for the global compensation. And he said to me, yeah, but that's because it has nothing to do with his compensation. And when it's his compensation, it's a very, very different conversation. And, you know, that only becomes more and more clear when you see some people really taking advantage of the system. And, you know, it's terrible that we see so many of these behaviors and very few people standing up and putting their hand up to say, you know, no. And this all goes back to all of the whistleblowing conversations that we have in, you know, TTF, is that when people do put their hands up and they do say, wait a second, this isn't right, they often are the ones that lose.
Yeah. Kim, I've got to come in there because on Thursday we've got our event all about the Blackmore bond scandal. So here we have somebody who's working in an office in London next door to an office being used by scammers, and he can hear their conversations, and they're phoning people up and tricking them into moving their pension funds and their life savings, etc. He can literally hear the conversations. He reports it all to the FCA, who apparently don't do anything. He reports it a year or so later, they still don't do anything. And it turns out, these are rough numbers, of the £45 million lost by savers, roughly 30 million was completely avoidable had the FCA taken the action they should have done when they could have done. And it really does beg a belief as to what's happened. So that's what Thursday's session is all about. Interestingly, today, I had a conversation with somebody from BEIS, that's the Department for Business, Education and Industrial Strategy. One of our politicians is very keen to try to sort out what is wrong with the audit profession. And over the next, hopefully, few weeks, there's going to be a new government report coming out all about fixing what's wrong in the audit profession. It'll be interesting to see what that actually shows. We'll probably have an event about it in due course. Yes, Gareth. Yes, Gareth.
I was waving goodbye to Francisco, sorry.
Okay. Back to you, Gareth. And I have to say, you've done a wonderful job. You really have. Thank you so much.
Thank you, Andy. Thank you. I had just one more slide, and I think we've sort of covered a couple of points, certainly a bit. I think in both films, you've got Nick Leeson saying, you know, we're there to gamble. You know, so when where do you draw the line? I'm gambling. How am I doing something wrong when that's my day job? Though, as we've talked about, that's not really shouldn't really have been his job. We could talk about the 83 Big Bang, which you alluded to earlier, Andy, which came up in both films. Or this final point, I'm not sure if anyone has got any views on this, but it occurred to me that what you have here is a company based in London, but with offices all around the world, including a small office in Singapore. It doesn't really have much oversight of. And what it sort of reminded me of was sort of big empires just before a fall, you know, where they have all these sort of disparate enclaves, which they don't really have much control over anymore. And the empire's grown and then moves into the next stage where it's sort of stagnation and then eventual decline. But that was just something that reminded me of. So just for this last slide, if anyone wants to come in on any of those points, then feel free.
I know I'm repeating myself, but I personally think the whole deregulation agenda, which is essentially a politically motivated mindset, it is responsible for a lot of this that we're talking about tonight. And I would go as far as to say that you know, the global financial crisis happened at least in part because of regulatory capture. You know, the big banks and the massive lobbying forces were able to sweet talk the regulators into going light, and it's just never going to work. It really is never going to work. All the time human beings behave like human beings, we have to assume that they'll do what they need to do to get on. You know, the reason we exist as a species, you know, mankind, womankind, the reason human beings exist is because we are hardwired to survive. And that means we have a hardwired bit in our DNA that's all about self-interest. So we have to recognize the almost kind of reptilian, I will do what I need to do to get on mindset with this reality that people can find themselves controlling huge sums of money, other people's pension funds and all the rest of it, and go and take a really, really shamefully lax view. And that, to my mind, is why I think we'll only ever get a financial sector behaving properly when we have effective regulation. It doesn't have to be loads of regulation. I'm not advocating loads of regulation. Who needs red tape? None of us. But we need regulators that are really robust and really firm when things do go wrong, so that everybody in the system knows that if you break the rules, you probably come a cropper. That's my view anyway.
And Andy, if I could add, it's not just regulations, it's the enforcement of the regulations. There's plenty of examples of, regulations that have been there, but the regulators, and this happens globally, just don't have the people. The investment banks and funds management firms have some pretty bright people that can stay ahead of the regulation as well. So I think that's also a really important point, that it needs to be implemented effectively. And to Garrett's point, I mean, I used to that multinational corporation, global firm, but it can get undone by a couple of people. I used to work for Merrill Lynch, and one year, the bonus pool, and I wasn't even in the investment bank, I was on the asset management side, so totally different side of the business. The whole firm's bonus pool was wiped out because of two traders who had the wrong bet on some Russian bonds. So, you're all sitting there for another year going, what on earth did that have to do to me, with me? But it can happen, but stuff like that doesn't make the news. But I mean, it happened at a number of investment banks, and, movies weren't made about it, but, it happens.
And on that particular point, about regulators need to enforce, we've got an event on Wednesday morning of next week. I say morning, it's an unusual one. We've timed it specifically so that people in the UK and people in Australia can attend. So it's 8 a.m. to 10 a.m. UK time. And the title of the event is Essential Ingredient for Effective Financial Regulation. And certainly one of those key ingredients is the belief that the regulator will enforce. I think we saw Kim with her hand up. Kim?
I was just going to mention, on the back of what Giles was saying, if more people knew about that and knew about, those two trades that knocked out the bonus pool for everyone, then maybe other people would step up and challenge their coworkers. And I just find that, there's just not enough challenging of people. Forget the whistleblowing and the really large things, but just on a day-to-day basis, people stepping up and people making their voice heard when they see something that, is happening right next to them. And as Andy mentioned, the person who heard the pension scamming going on. But that's the thing, we as a society, our moral compass is gone at the moment. I know we're trying to get it back, and we're doing a really good job, I think, right now in the US. But, just in general, our society really needs to rethink some of their actions. And I know that's what we're all about here at the Transparency Task Force, which is why, I'm very proud to be a volunteer.
Thank you, Kim. And on that such a lovely, lovely note, let's pass back to Gareth, who's going to close the session for us. Gareth, superb job. Can we please all show our appreciation to Gareth? Because I know you spent a fair amount of time and effort preparing this, and it really does show. Thank you very much, Gareth.
Excellent, Gareth.
Bravo.
Excellent.
Bravo. We're lucky to have
you
you
very much.
It
was worth the time, because I found all of your sort of insights fascinating, and I feel like I've learned so much in just over an hour. So it's definitely worth the effort. And I love these clubs. I love watching the film and knowing that I'm going to be discussing it with knowledgeable, interesting people afterwards. So I'm really happy to do it. I hope you enjoyed it too. and I'm very much looking forward to the next one. And I suppose I should be sort of humble, learn the lesson, and sort of thank Andy as well. I mean, this wouldn't have happened without Andy, so thank you to Andy.
Great team effort around, as always, for the TTF. Cheers, Gareth. Thank you, everybody. Good night, good evening, good morning, whichever applies to you. And Giles, seriously impressed you dialed in at like 5:20 this morning at your time. Thanks, everybody.
Thanks very much. Have a good night. Take care.
All right, bye-bye.
Bye.
Thanks, Gareth. That was great.
Thanks, Gareth.
Yes.
Really great.